Most traders lose money on gold not because their entry is bad, but because they trade against the higher time frame. In this lesson, I'll show you a step-by-step multiple timeframe strategy for gold, XAU/USD. That helps you identify the real market direction, avoid fake signals, enter with high probability, trade calmly, not emotionally. This strategy works for scalpers, intraday, and swing traders. Part 1. Why multiple timeframe matters. Gold is volatile, manipulative on lower timeframes, trend-driven on higher timeframes. If you trade only one timeframe, you see noise. If you use multiple timeframes, you see structure. Higher timeframe equals direction. Lower timeframe equals entry. Part 2. Timeframes we use. We'll use 3 levels. Higher timeframe, D1, H4. Market bias, buy or sell. Middle timeframe, H1, M15. Setup and confirmation. Lower timeframe, M5 or M1. Entry and stop loss. You don't need many indicators. Price plus structure plus momentum is enough. Part 3. Higher timeframe bias, D1, H4. Step 1. Identify market type. Ask 3 questions. 1. Higher highs and higher lows? Uptrend. 2. Lower highs and lower lows? Downtrend. 3. Equal highs and lows? Range. Step 2. Mark key levels. Major support. Major resistance. Trendline or channel. Step 3. Use RSI, ADX, optional. RSI above 50 bullish bias. RSI below 50 bearish bias. ADX rising above 20 trend is gaining strength. Rule. Never sell in a higher timeframe uptrend. Never buy in a higher timeframe downtrend. Part 4. Middle timeframe setup, H1 REM15. Now we wait, not trade. What we look for. Pullback to support, in uptrend. Pullback to resistance, in downtrend. Best structures. Flag. Channel. Triangle. Corrective ABC. Momentum clue. RSI cools down, not overbought or oversold. ADX drops correction phase. This tells us trend is resting, not reversing. Part 5. Lower timeframe entry, M5 or M1. This is where money is made. Entry conditions, by example. 1. Higher timeframe equals uptrend. 2. Middle timeframe equals pullback completed. 3. Lower timeframe. Break of structure, BOS. Higher low formed. Strong bullish candle. Stop loss. Below the last higher low. Or below structure. Take profit. Previous high. Next resistance. Or 1213 are our minimum. Golden rule. Entry is small time frame. Decision is big time frame. Part 6. Common mistakes. Trading M1 without bias. Counter-trend trading. Entering before structure breaks. Using RSI overbought to sell strong trends. Overtrading gold during news. Remember, gold trends hard, but punishes impatience harder. Part 7. Simple daily routine before London session. 1. Check D1H4 bias. 2. Mark support and resistance. 3. Wait for pullback. During London or NY. Point 4. Drop to M15 M5. 5. Wait for structure break. 6. Enter with discipline. Part 8. Final advice. Trading gold is not about prediction, indicators. It's about alignment, patience, execution. When all timeframes agree, the market does the work for you. Thanks for watching.